Hello friends, it's Victor with you and welcome to my YouTube channel. Here I trade binary options on the PocketOption platform, and in the description below this video you'll find a link to my Telegram channel where you can ask me any questions you're interested in. You'll also find a link to my private Telegram channel where I share my daily trading signals, and I also run weekly marathons to help you increase your deposit from $150 to $5,000. Guys, this happens every week. Be sure to join it. And in addition, if you text my private Telegram channel, you will get a link to sign up for PocketOption with a 50% gift deposit absolutely free as a nice bonus. After a prolonged growth, the price went into correction and hit the local mirror level, from which I will go into a $200 purchase. Let's discuss false breakouts today. When most traders or investors pour money into the market based on the fact that price patterns has been broken, they always expect that a deal will be profitable. However, here you need to understand that the most professional traders, or to clarify, successful professional traders, expect that they will lose money as often as they earn. Oh, and how is it? What will make them successful? The fact that unprofitable transactions will be proportionally smaller than the profitable transactions. Cut losses, let profit grow is a trivial expression that everyone has probably heard, but this principle works flawlessly. And all this work try to convey an important fact. Technical analysis deals not with certainty but with probabilities. And the deal closed at $354. While the price is not going to turn around, so I'm going to buy it for $200. What technically needs to happen in the market for the situation to change from the bullish to neutral and from it to bearish at all? There are two reasons why we need to understand this very clearly. First, price trends are just people's activity and nothing more. And people can and constantly change their minds. This is exactly what happens to the market. Wherefore, you need to be prepared to such situations in advance. Secondly, if we are prepared in advance, psychologically, for the fact that situation in the market will change, it will be much easier for us to emotionally when it really happens. And if you cannot prepare yourself for such situation, then small losses will inevitably become big ones. And in the meantime, the deal closed at $354. Well, now you can turn around. I go for $200. Why do false breakouts happen on the first place? The main reason for the unsuccessful breakdown of the pattern is that they occur against the trend. In other words, this is a bullish breakdown in a bearish trend and the bearish in a bullish one. If you're looking at some asset and it's going in the main bearish trend, when this trend is the main one, especially for short or medium term trends that are interested in. Consequently, most of the short-term trends will be directed downwards. Emotional reaction will be strong, false will be short. Now imagine that in this situation, a bullish price pattern was drawn on the chart. By the time the breakdown is formed, always all the possible potential of such a pattern going against the trend will already be trivially exhausted. So the deal brought me $354. The price is worth it, but it should go down, so I continued to go on sale for $200. Additional indications of false and correct breakouts. In order for the breakdown to have a better chance of remaining that way, it must be decisive and specific. At the same time, you will have to determine the level of such determination yourself, based on your experience and your knowledge. Unfortunately, it's not so easy to take and indicate the possible percentage of how successful the breakdown will be or not, since different assets will have completely different volatility. As a result, a breakdown of a low volatility asset will not be as decisive as, say, a breakdown on a very volatile asset like mining stocks or technology companies. The second important factor is the time frame, the time period. A breakdown of 3% on a 10-minute bar can safely include the entire movement. On the other hand, such a breakdown on the monthly chart will be much more significant, since a new trend formed with a successful breakdown can last up to 9 months or even more. And of course, it will have much greater impact on the market than the trend on a daily or intraday charts. So the deal brought me $354 again. I feel that a breakdown may occur. I will go on sale for $200. Many technical analysis tools use such a criteria for a successful breakdown as 2 bars. If only 1 bar has held the breakout, when this may be a signal for its exhaustion. 2 bars already testify to the strength and confirmation. Such a simple rule will certainly filter out a lot of false breakouts, although not all of them. A small disadvantage of this method is that by the time the second bar is formed, price can already go very far from the breakdown zone. So if a deal is open for an increase and you're going to close it, or for a decrease and when it will have to be covered in any case, this is not a special problem. All you will lose is a potential opportunity. The markets are not going anywhere. The nearest opportunity will always be right under your nose, and you will only have to be patient and wait for it in a disciplined manner. The breakdown didn't go, but the deal closed at $354 plus. So guys, I thank you for watching this video till the end. I hope you like it and you give it a like. Make sure to join this channel because there's always only interesting information and the most interesting analysis. So that's all for today, guys. See you in the next video and wish you luck in your own successful trading. Bye.